Markets continue to sell off regardless of the $1.9 trillion pandemic relief bill that is pending upon President Biden's signature. Let's take a look at some of the most opportunistic EV stocks in the market right now during this sell-off. If you're invested or thinking of investing in CCIV, NIO, XPEV, and Workhorse, you don't want to miss this video. We will go over any new news and price targets. Make sure you click the like button, subscribe to the channel, and click the notification bell to join our Options Temple community. And as always, timing is everything. Get notified so that you don't miss an opportunity. If you're new to investing or unhappy with your current trading platform, try Webull. Get 2 free stocks with Webull if you deposit $100 or more. Click on the Webull link under the description below. Is NIO Stock a buy after massive sell-off from record high? NIO has sold off sharply along with other EV stocks. While a global chip shortage could curb growth for the Tesla of China, NIO went on a tear in 2020, doubling electric vehicle sales and coming back from the brink of bankruptcy. The EV startup kicked off this new year strong, unveiling its first electric sedan and posting a huge January sale gain. NIO stock has lost 45% since hitting a high of $67 on January 11th. On March 8th, analysts at Jefferies slashed their price target on NIO stock to $38.88 from $60 a share. They cited, in part, risk from tougher competition and higher spending through 2025 on manufacturing partnerships and technology development. In particular, Jefferies flagged competition for NIO's premium ES8 electric SUV model. In China, homegrown EV startups and foreign brands, including Tesla and Audi, heavily compete for the luxury SUV segment. Tesla offers a Model Y in China. In summary, this article goes through some NIO earnings and fundamentals and concluding, 4 analysts on Wall Street rate NIO stock a buy, 4 have a hold, and none has a sell according to Zacks. Let's take a look at some price targets. NIO has been trading between $50 to $70 since the beginning of the year. On February 17th, NIO broke down my 10-day moving average and turned bearish. This purple line here is a 10-day moving average and represents bullish and bearish sentiment. I have 2 major support levels here at $39.50 and $25.50. These 2 price targets are great entries to start or add into a position. Now that NIO just plowed through the $39.50 price target, I see this stock easily going to $25.50 in no time. The last price target here is at $17. I think it is unlikely we will see the stock go down to those levels in the near future. This stock should stabilize between the $29.50 and $39.50 range for a few weeks before seeing another bull rally. Now let's take a look at XPEV. XPEV earnings were good enough. Don't be confused by seasonal shifts. XPEV reported today 4th quarter results that beat analyst estimates and appear good enough to reassure investors who were wary of delivery forecasts from the other 2 US listed Chinese EV makers. XPEV's own forecast looks light as well, but management seems confident 2021 will be a big year. XPEV expects to deliver about 12,500 vehicles in the 1st quarter, down from almost 13,000 in the 4th quarter. But seasonality is playing a big role in the decline. The Chinese New Year is almost a half-month break. You just physically can't register your car for delivery for 2 weeks, XPEV's president told Barron's. Importantly, the company also plans autonomous driving upgrades throughout the year, including the first production car with LiDAR sensors. LiDAR is short for laser-based radar and is an effective but expensive sensor that helps enable self-driving cars. The Audi A8 has LiDAR. That is a high-price, low-production model. LiDAR has to make commercial sense. Our production is mid-level, about $31,000. Making LiDAR available in cheaper cars is an achievement. LiDAR, along with software enhancements, will allow for more self-driving capabilities that function in cities as well as on highways. Advanced driver assistance features today work best on the highway. Let's take a look at some price targets. XPEV IPO'd in August of last year at $23 a share and hit a high of $75 in November. Just like NIO, we are seeing a huge correction since February 17th. 3 key price targets for XPEV is the $38.50, $30, and $20 price targets. We are basically sitting right in between at $27. I see this stock stabilizing between $20 and $30 in the next few weeks and currently is at a great place to start or add into a position. Now let's take a look into CCIV. Lucid Motors achieves another milestone. CCIV shares now trade at an attractive discount. Lucid Motors, a company that seeks to popularize its ultra-luxury Lucid Air EV, suffered a setback recently when it announced a delay in the official launch of its electric vehicle to the second half of 2021. Now, however, the company is poised to boost the confidence of its investors as it achieved a major manufacturing milestone over the weekend. As per the reporting by the Casa Grande Dispatch, Lucid Motors has now procured the requisite approval from the Casa Grande Planning and Zoning Commission to begin Phase 2 expansion of its manufacturing facility, the AMP1. The facility currently consists of 2 buildings that cumulatively occupy 820,000 square feet. Phase 2 will add another 2.4 million square feet in manufacturing space, including a stamping plant, general assembly, etc. Crucially, Lucid Motors will be able to increase its manufacturing capacity from 34,000 units to 90,000 units per year once the Phase 2 expansion is complete. The Lucid Powertrain Manufacturing LPM1 plant is also located in Arizona. This facility will manufacture electric powertrains, battery modules, and management systems, and Wunderbox chargers. The company is also in talks to establish another manufacturing facility in Saudi Arabia. Let's take a look at some price targets. CCIV traded between $25 and $22 today. Markets are feeling sluggish and CCIV seems to be finding a bottom here. I see this week being a slow-moving week for CCIV and trading in the range of $20 to $25 for now. We won't see any bullish runs until the $1.9 trillion pandemic bill gets signed by our president. Let's now take a look at Workhorse. Workhorse today had a bullish, knee-jerk reaction on some possible good news. Workhorse lost more than 50% of its value in the last month. Workhorse lost the anticipated USPS contracts to Oshkosh, who will make gas-powered vans for the USPS. There are really 2 theories at play here. One, the Postmaster General Louis DeJoy is a legacy Donald Trump holdover and therefore awarded the contract to Oshkosh to win good favor with the folks in Wisconsin, which is a critical swing state. Or 2, Workhorse was a Trump-favored EV company and therefore Biden and company somehow convinced the USPS to not give the contract to Workhorse. Are either possible? Sure. Probable? No. But there is talks in Washington, D.C. of looking into the USPS decision more closely and potentially even outright giving USPS more funds to just buy electric vehicles. One of the stated reasons for the USPS not going all electric was cost. So, the Workhorse USPS saga isn't over yet, and there is a chance that Workhorse ends up winning some order flow with the USPS, and this is why the stock jumped today so quickly. Now that both UPS and USPS have walked away from Workhorse, it looks unlikely that the company will attract much talent to help improve its EV technology, and or that the company will be able to raise much capital at favorable terms to expand manufacturing capacity. The company is operating with both hands tied behind its back. That's not a great situation. Let's take a look at some price targets and see what we can do here with Workhorse. Workhorse since July of last year has been trading between $15 and $30 like a ping pong. This stock is a trader's dream in hindsight. In February, it hit a high of about $43 and has been melting away since then. I'm personally not interested in investing in this company due to the many negative news, but it does look like a great stock to trade. I would consider buying at these levels with a $12 stop loss. The downside would be $3 and the potential upside would be $25. That's some pretty good risk reward. The market's closed today with 3,400 advancers and 2,800 stock decliners. Markets were bearish today with a slight pullback at the end of the day. I just opened my new store. If you would like to support this channel, take a look and pick up a t-shirt. Click on the link under the description to go to my store. That's pretty much it for this video. If you liked this video or found this information useful, click the like button, subscribe to the channel, and click the notification bell to see more trading and investing ideas. I'm not a financial advisor, and this is for entertainment purposes only. And as always, timing is everything. Get notified so that you don't miss an opportunity.